Hey traders, so this video we're going to talk about the different types of indicators out there. When you bunch all of the indicators together, you basically have four sort of main types of indicator. You have trend indicators, momentum, volatility, and volume based. So let's quickly work through each some of the main ones with each sector. So starting off with the trend ones. So if we move this across, so first of all we have the MACD. So what a MACD stands for is a moving average convergence divergence. So let's just get a chart over here. Let's not apply any template. Let's just go to a random, something where I don't have any trades on. Euro, Loonie, nope, got a trade here. Okay, here we go. So 4 hour, doesn't really matter. Let's look at the daily. So the moving average convergence divergence. So you'll learn this later with the FXM tutorials, but all you need to do to get an indicator out is either press I on your keyboard or just press right click anywhere on the chart and go add indicator. So you can scroll down the big list of many indicators here, but if you can't find something, just type it in. So MACD, okay, and just going to do the base settings here. So with all these indicators here, all I'm going to show you is I guess the common way that most people use them, because eventually you're going to learn to see what works best for yourself. So I used to use MACD quite a lot, and what I found is that actually the main settings, the FXM based settings, are actually the best. So what it's basically showing you are these two lines. One is the fast moving, so the red one is the fast moving average, and the blue one is the slow moving average. Now what this tends to do is show you reversals in a market. So when you have a big crossover like this on the below this zero line, as you can see there's a zero line going across the whole thing. When you have a cross like this, it's showing you that the market is going to reverse, and likewise when you have one at the top, it's going to fall over. So if we were to draw a big line, vertical line just after, so if we were to imagine you're seeing this for the first time and you see the crossover, which is at this point here, you're thinking, oh okay, the market's going to fall over now, and guess what? It does in a large manner. You can do the same over here, and then yeah, it has gone up quite a bit, but then it does continue, and when it's in the middle you you tend to ignore it. So here's another one, and then the market fell. So I did use this quite a lot, and you can still use this. You just have to be subjective, because sometimes you do get fake outs, but eventually it does come good. But using the indicators is one thing. You have to know when to get in, when to get out. But yeah, the reason I like this is because it used to be quite accurate, especially on the daily chart. You saw this happen a lot, as you can see here. We just add in last one. Now this is a nice one actually, where it's really high and it crosses over. So yeah, as you can see, sell, buy, sell, yeah. So that's the MACD. You then have moving averages. So let's just clear everything, remove. And a moving average, in fact, we can just go to one of these. So yeah, as you can see here, we have pound Kiwi, and I've got an 8 EMA and a 21 EMA, and basically what these moving averages do is it takes, so let's take the 8 EMA and the close 8. So what it's taking is the closing price of the last, so it's here, the closing price of the last 8 candles, and then finding an average and then plotting a chart. And that's all it's doing. So obviously the lower the moving average, the closer it will hug to the market. Then we have on this list Heikin-Ashi. So Heikin-Ashi is a cool one actually. So if we just find it, Heikin-Ashi, I will spell it out. Here we go. If we just do close to close, There we go. And so what it does is it basically separates it tries to get rid of some of the noise. So it is, yes, a bit of a trending one, but it helps you get out of a trade. So most people try and use it to get in, but I actually prefer to use it to get out of a trade. So let's try and compare two identical charts. So let's just do this. What was it? Luna yen. Sorry, not pound yen, Luna yen. There we go. Let's put one down here. Okay, and let's both get them on the daily chart, just so you can do a side-by-side comparison. So yeah, the top one is the Heikin-Ashi, obviously, as you can see. Why won't it let me squeeze in? Sorry, I don't know what's going on with the... So I can do it on the bottom one, but for some reason, it's not letting me... I've got 99 problems, and this is one of them. Sorry, why is this doing that? It's not letting me zoom in. That is very odd. Well, that is odd. For some reason, I think it's a glitch with FXM, because every time, so when you don't have the Heikin-Ashi one on, it doesn't let you zoom in, so I'm just going to leave it. So yeah, as you can see, on the bottom chart, it's a blank naked chart, and there's lots of ups and downs. And with the Heikin-Ashi, it basically tries to get rid of some of the noise. So as you can see, when it is falling, like on this one here, if we compared these two, let's zoom in a bit. With that blue bar there, it doesn't really show it on the Heikin-Ashi. So some people may have got scared out if they saw that, whereas on the Heikin-Ashi you don't. So what you could do is, if you are in a nice profitable trend, when the Heikin-Ashi reverses color, you can, or a couple of them, you can maybe get out. So as you can see, it does try to help you stay in a trend slightly longer. So let's get rid of that little glitchy thingy. So that's that. Now let's have a look at momentum. So we've got RSI, so it's relative strength index, and stochastic. So really, momentum indicators are well, they're oscillators. So they're showing you the market going up and down, up and down. So let's get this one back. So the first one was RSI. So let's just type in RSI. There we go. Just put any old settings, and I'm just going to show you the principle of it really. So what it stands for is relative strength index. It doesn't show you the direction, it just shows you how much momentum is in the market. So, and you see there's a 30 level or a 70. I mean, you can change it to 80 or 20, it's up to you. But long story short, when the market goes below 30, it shows that the market is oversold. So it then should reverse. And if it's above 70, it's overbought. So it should then reverse. So here, let's put some little lines in. Oh my lordy, I've got fat fingers today. So yeah, over here it's saying, or in this sort of range, it's saying it's oversold. So we should have a reversal, and we sort of did. Do we get anywhere it goes really below? Yep, okay. Starting to get oversold here, then we have a bit of a reversal. What about overbought? We have, yeah, this was, so with most indicators, sometimes it works amazingly and sometimes it doesn't. Here is a great example. Let's see this one here. So enters really oversold, carries on down for a lot longer, a couple of weeks really before it starts reversing. Here's another one. What happened here? That was bang on. Bang on. And then sometimes it can keep you in for ages. So here you probably thought, oh yeah, let's short it, and then it carries on going up for a couple of weeks. So yeah, that's basically it. So that's the RSI, the relative strength index. Another one that you can have a look at is stochastics. So do we have a stochastics? Stochastics. Here we go. And it's the same principle. It's basically overbought, oversold. So let's just put in some lines and let's have a little look. So here, 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 let's just look at these. So oversold. So let's go long. Yep, it goes slightly, but not that much. It's only 100 odd pips. Then it goes overbought. Then it goes down. Yep, oversold. Yep, let's go up. Sweet. It's now overbought, so let's sell it. Sort of eventually. And then it finally gets into, yeah, overbought again. So yeah, when you're taking a little snapshot like this, it does look quite accurate, but indicators used alone are not the be all and end all. You have to have the full picture. So that's momentum. So, but yeah, you can start seeing all that sort of stuff. Let's just clear the chart again. And the next one we have volatility, which is ATR. So what it stands for is average true range, and this is actually a really good way to do your stops. So yeah, so here we've got the standard settings 14, you can change it, but all it's doing is basically showing you the average price movement over the last 14 candles. So when you hover your mouse over here, you can see that there's orange number to the right. So what is it, 575? Now this is really confusing because it's doing it in accordance with, you know, the pricing on the right hand side. So the way I look at it is it's saying that the average volatility during, you know, for this market right now is either 575 pips or 57.5 pips. Now I know it's straight away it's 57.5 pips, but when you're playing with things like gold or the exotics, it could be a bit, you know, more. But then you can just get your ruler out and start measuring each one. Go, okay, 26, 50, yeah, and straight away you know that, okay, average range of the movement of each bar is about, you know, 50 odd pips. So that's that. And so it's really handy for stop losses. So if you're trading something like over here where the market's gone nuts and ATR's shot up to 111 pips, you know that if you have like a 30 pip stop, you're going to get sneezed out or just breathed out basically. Whereas, yeah, so you could do something like always have 1 times ATR or as your stop loss. It's up to you really. I've got my systems, but eventually, I mean, the whole reason for this, the existence of me in this program, is so that you eventually do not need me. So yeah, so right now ATR for this one is, let's try and Aussie Kiwi, let's look at something else. So right now we are going, oh, nice profitable trade here. It's only 63 pips up, but we got picked in beautifully here. So yeah, ATR, for hover it over here, it says 560. So yeah, it's 56 pips. So yeah, so hopefully that makes sense. And the last one is volume. So I don't actually use volume. So volume is one of the holy grail trading indicators out there, but it doesn't really exist for us mere plebeians. The reason being is if you had a perfect volume indicator, you could see in real time all the buy orders coming in and all the sell orders coming in, and how much of, you know, how big the buy and sell orders are. So if you could see in real time that, okay, you got 10,000 worth of buys coming in, but 100,000 worth of sell orders coming in, you know the price is going to drop. But unfortunately, you never get proper pricing. So, for example, if we just remove this, FXCM does have a volume indicator. It says show tick volume, and this is it, but it's only showing you FXCM's data. It's not showing you the whole market, and it doesn't really show you the, you know, whether it's buy or sells. It just shows you that it's 580 odd thousand worth of trades. So yeah, it doesn't really show anything. So yeah, that's it. That's a big quick run through of the main indicators, and over the course you're going to see that we tend to really stick with the moving averages. That's pretty much all I use. So yeah, hope that makes sense, and I'll see you soon. Toodles. Bye bye.